we get involved in situations when there may not even be a deal, or we'll come and work with our clients on their strategy, or trying to figure out what is the issue or what is the need, and that may end up being a transaction that we'll execute, or that may end up not being a transaction. So it's more about being an advisor in the true sense of the word than necessarily processing the transaction.
Welcome to another podcast episode of Investment Banking Decoded, where we are conversing with the US and the European bankers. Today, we are joined by Amit Thakur. He's a managing partner and founder of Amax Capital. With more than 2 decades of experience in investment banking, M&A, leverage finance, and cross-border advisory, Amit has advised companies across industries of some of their most important strategic decisions. We are excited to hear his perspectives on deal making, capital raising, and navigating today's global business landscape. Welcome to the show, Amit, and thanks for joining with us.
Good morning, Narayan. Good to be here.
So, to start off with, I would like to understand, could you please walk us through your background and some key milestones in your professional journey and how you have started Amax Capital?
Sure. So I've done this, as you mentioned, for over 20 years, 25 years, to be more precise. And a lot of that has been spent in cross-border transactions. M&A has been the central focus most of this period. But also, I have spent time doing leverage finance, especially the more bespoke kind, and I'll come to why that's the case, and equities, mostly on the private side. Some of the more interesting pieces in my 25 years of journey, where I started in India, and then a bunch of us came together to start off Standard Chartered Bank's South Asia practice. We did and created the M&A business, but then we also added another piece, which was really the more event-driven, bespoke principal credit pieces. A very interesting thing to do. We're talking about more than 2 decades ago, where the regulatory and the market dynamics were very different. So we built that out. We were very successful, and then built a few other businesses for the bank. The last one was the bank's US M&A business, and I started that over 13 years ago. Spent time, and then decided to go independent. And that is when Amax Capital was founded. Now, what really is Amax Capital? I think there are some pretty important, and I would say interesting thesis that we've built it around. Number one, we focused on what we call complex transactions. I started thinking about building this out in 2018, and God knows there was no need for another boutique which wanted to run your usual sell-side auctions, right? So, but when I looked at the landscape, I realized that there was a very clear, glaring white space there. For very large transactions which were complex, and very often the dimension of complexity came from it being cross-border. Not always, but not infrequently. There was the large transactions would find a lot of the large banks wanting to advise on that, including my old shops, I would say. But the moment you came down the size bracket, whether it was transactions or clients, suddenly you're in the boutique territory. The clients would not necessarily find the boutiques who were either interested or were necessarily um, focused on those kind of transactions. And we said we wanted to do that. So that was pillar number one of what we did. We were focused on more complex transactions which needed more hands-on approach. Number two, we also wanted to build this around what we call real advisory. Rather than just processing a transaction. So what that means is we get involved in situations when there may not even be a deal, or we'll come and work with our clients on their strategy, or trying to figure out what is the issue or what is the need, and that may end up being a transaction that we'll execute, or that may end up not being a transaction. So it's more about being an advisor in a true sense of the word than necessarily processing the transaction. And the third thing was we wanted to not be very focused on specific sectors. It sounds like a bit of a heresy in the investment banking world, but our thesis was that there is a fair bit of value that you add by cross pollinating across sectors. Number one. Number two. Our value add is understanding the sector, understanding the client for sure, but really it is around the pillars that I had talked about. So with that in mind, I started Amax. Um, it has been a very interesting journey. We have tracked and sometimes not very closely how the low mid market or mid market transaction landscape has worked, with the caveat that given our model, we end up sometimes doing better than everyone else when they're not doing terribly well, and sometimes being under pressure when everyone else the market is booming. So that's what we do. I know I threw a lot there. Let me know if you have any questions that you want me to um, respond to or elaborate upon.
Yes. So definitely. So I would like to understand that what are your top focus when you're talking to your client? Like, how do you take your client in confidence?
That's a very good question. So and again, there's no one clean answer to that, right?
Yes.
Given what we do and how we do. Um, the first thing is, as we said, we aim to be, and I think for most parts we succeed in being a true advisor. What that means is you have to upfront be able to demonstrate that you can be an advisor, not just a processor. Um, that uh, not infrequently means that these are relationships that we have had for in our current lives, past lives, all of that for years, if not decades. Okay, so in situations like those, there is some amount of well, I would call it goodwill, but really more about familiarity with what we bring to the table. In situations where we do not have that familiarity, I think most often what we focus on is either bringing a different way of thinking about a transaction, and that also means that we go out and proactively think of ideas and pitch when we are not expected to, or the client is not necessarily soliciting our advice. Okay, or when we are being sought. Giving a perspective, bringing something to the table that the client hasn't thought of by themselves. I'll give you an example that can illustrate this. Last year, we had a situation of a US industrial technology player. Um, they wanted to create um, a downstream business around manufacturing. So they have the technology. They want to do manufacturing in that particular industry space, but they didn't necessarily have either the wherewithal or the meaning really capital or the experience of doing that. Um, as it so happened that they were approached by a very, very large Asian manufacturer in their space, and they decided to create a joint venture. They had already signed up a joint venture, and we were referred to them for really the fundraising part of it. They needed the capital. They needed to raise the capital to put in their bit of the JV capital. And which is when we come in and we realize that a lot of what they had thought about in terms of structures, in terms of operating arrangements, in terms of how and if they can exit, that was already frankly memorialized in the JV agreement, just wouldn't work. We've worked on that particular cross-border corridor for many decades. We knew that there were things which were of there were latent risks, if you will, and which is when we said, look, capital raising is one thing, but we think this and this is what you should be thinking about. And it was pretty much a beauty parade of advisors, and they were quite taken aback. Right, this was supposed to be a capital raising beauty parade about the investment pools that we could access, but we've gone to the heart of the transaction. So these are the kind of things that we do. We tend to bring to the table. Look, I'm not going to flatter myself by saying we always end up being that, but we certainly aim to be more cerebral about what we're advising than what you would typically expect, or certainly more cerebral than what a client expects.
That's great, Amit. So in all these deals which you have worked, is there any other specific deals which is very memorable to you due to some or the other reasons? Like you need not tell the names, but you can just share the experience of how that deal was done.
Sure. And look, if you've done this as long as I have, it's difficult to choose from these. Who's my favorite child? That's really your question. So I'd say, look, I would talk about two situations, and I'm being a little careful simply because the nature of our practice is such that a lot of our transactions, you'll never find it in the papers. And more importantly, they have aspects which are not necessarily related to the deal. I'll talk about one transaction that is memorable because it worked so well, and another because it did not. So we got involved in a situation where there is actually an Asia headquartered fund which does trade finance in a very interesting niche of the market, a massive niche, but still a niche of the market. And they've got a strategy which sets them apart from all the usual players in this space, bank and non-bank players. They have had an impeccable track record, but they've struggled to grow beyond a few $100 million of AUM. We've come in. The idea is to take it to investor pools that up to this point they've not really focused on, and the biggest one, of course, happens to be the US investor set. So we've got involved in that. The idea is to grow them to over $1 billion in AUM, and this has been interesting. And this is a work in progress, to be perfectly candid, because you don't go from a couple of $100 million in AUM to $1 billion in a few months for a strategy which takes telling the story that this one does. And we've taken it to the market. We've got them to understand a lot of the idiosyncrasies or unique requirements of this market. They've distributed a lot in Asia and Europe, so they're their structures, their operating practices, hew closely to that. But US is a slightly different kettle of fish. We've done that. We've got very interesting investor pools that are interested in it. And we believe that over the next 6 months, they should get to $500 million, and over the next 12 months, probably $1 billion. So that's one kind of a transaction that we think we've done that I think it's a great transaction from every point of view. What it does to the fund, what it does to the client, it's a unique thing. You got to tell the story. It's not, you can't put it on the screen and hope for it to clear. But then we've also been in situations where it's not worked very well. We were taking an Asian technology player who had got into they moved from software to hardware, and they created a product and a technology that they wanted to license out in the US. So equity plus license kind of a game. Our view was that it needed a fundamental restructuring for it to make sense, both in terms of the arrangements as well as the client and the holding structure. The clients were not terribly interested, and over a period of time, it did not work out. So the learning from that is that we can advise, we can show the direction, but at the end of the day, it is the client who's the principal. The client has to decide, and there are considerations which we as advisors may not always think are the most important, that are important for the client, and therefore they may decide to operate in a way which we think doesn't make sense, but it's perfectly rational from their point of view. So there are tons of transactions which have done really well. There are many others, way more than the ones that have worked, that have not worked, and we learn every day from each of those.
Yes, definitely. So this is the same thing which one of my other interview, he was also saying the same thing, that investment banking is all about making difference in other person's lives. Like someone who is willing to looking to sell the company. So making changes in people's life is the motto of investment banking. So this is what he told me. And again, learning from the daily experience also makes it much better.
Absolutely.
So, as a continuation of that, I want to understand, we are already in the middle of 2026. So for the remainder of 2026, and last couple of months, the market is up, market is down, so many things happening, so much things are happening. So I would like to understand what's your focus for the next 6 months, and what sectors are booming in the market right now, and how do you see that?
Sure, and that's a question we deal with, we ask ourselves every day, right? To really keep us headed in the right direction, keep us headed where we want to go. 2026, it started from 2025. I think has been defined by a few different happenings, if you will. One is the choppiness on people's comfort around trade. Now, trade in and of itself, for a lot of us investment bankers, we tend to think of trade as something that happens somewhere, which it should not impact directly our deal making. Well, it does, because I think that has had a non-trivial impact on cross-border sentiments, and that is the arena we play most. It has had an impact on specific corridors. Whether we like it or not, geopolitics do color people's view on both the risk and their appetite. So that was happening last year. That has obviously has become even more pronounced in the half of the year that we've just that we will finish. We want to continue to stay focused on this theme because we believe that this is exactly the kind of complexity that clients need help navigating themselves around. Okay, we've done this. We've seen various different flavors of this over the 2.5 decades that I've been working. My partner's been around, so we know some of the things to look out for. We also are very focused on understanding where things can finally end up. I'll give you an example. Um, we were doing a lot of stuff in the digital infrastructure space, really the data center across the um, uh, spectrum of that. Um, and a fair bit of the deal conversation was for us, given the practice that we are, was in the US West Asia corridor or US Middle East corridor, right? Um, we're talking about substantial transactions, substantial kind of investment dollars, really flowing both ways. Um, the West Asia situation that erupted earlier this year has made it pretty much impossible for a lot of the counterparties in West Asia to take a view, feel confident, and set aside capital for a risk allocation into this sector. Right. So we want to be helpful to a lot of our clients here who were banking on some of these capital flows, as also the really talk to the counterparties in those parts of the world, explaining to them that like the situation on the ground sometimes it's nicer than what you read in the papers. So that's something that we want to continue to do. We want to continue to focus on digital infrastructure and AI as a theme. But we also do believe that because of the sort of the limelight that AI and everything related to that is getting, there are transactions, there are industries, and there are clients that are left in the shadows. I think we can be very helpful there, and we are sort of increasing our efforts. That look, the reality is AI is here. It's big. It's taking a lot of bandwidth and capital allocation, but the rest of the economy isn't exactly disappearing, right? It may need to restructure. It may need to be reinvent itself, but that's not going away. So there's activity there. It's we do not want to be the ones who lose sight of that. So that's really what we're focused on. Just in terms of the mix of products, because we do M&A and capital placements. Um, I think we will be a little more focused on M&A now because apart from certain obvious sectors, valuations are returning to more sort of rational territory, or really the bid-ask spread between the buyers and the sellers is narrowing. So we think more M&A can happen now, especially in the middle market and the low middle market deal size spectrum than what was happening in 2025, which was not great.
Yes, that's great, Amax. So, Amit, I want to understand, like, as Amax Capital, like, is there any particular industries or sectors you are focusing for capital raise and M&A?
The short answer is theoretically no, but the reality of life is obviously we don't know everything about everything, right? So there are certain things that we end up focusing more on than others, and that is modulated also by what I told you about our three pillars of why we exist. So if you look at cross-border flows, a lot of our sectoral preferences, if at all we can call it that, um, they are they're dictated or at least informed by what's happening on cross-border flows, right? So we end up doing a fair bit of technology. Um, Given North America, Asia axis that we are most strong in, we used to do a lot of tech services. We continue to do that, but obviously that's an industry which is under a lot of pressure. Which again, as I said, the more complex it gets, the more uh, valuable we can be to our clients. We also, for a bunch of reasons, really historical artifact, if you will, spend a lot of time doing hospitality um, across the world. We've done that. Mortgages, especially around mortgage servicing, is a space that we spend a lot of time. And finally, anything that is metals and mining or manufacturing, really related manufacturing, we spend a lot of time on that. So these are the things that we focus on. But having said that, we will, if we can add value, we will get involved with other industries as well and sectors.
Yes. So as a continuation of that, like how are you incorporating AI or data tools on your daily workflow?
That's a very interesting question. Look, we're still trying to figure out. Okay. In the sense, are we using it? Yes. How are we using it? That changes every couple of months as this space itself develops. At this point in time, given the nature of our practice, where we want to be really focused on being an advisor, we are using AI tools mainly as facilitation tools. I mean, think of it as where we would have very junior research analysts. Some of that we have tools that can take care of that. Having said that, the that's more about data wrangling, collection, organizing. We are not yet at a point where we are using tools for decision making. For example, um, who are the buyers who really be focused on a or be interested in a particular transaction. We're still doing a lot of it ourselves. Um, will we get to a point where we feel comfortable enough using this? The answer is yes. But I have a broader view, almost a AI safety issue related to our industry that I have an eye on, which is I want to be a little careful of replacing everything that, let's say, an analyst, associate, or a VP can do. Um, the day we do that, the pipeline of experienced investment bankers start drying up at the intake point. If we do not have junior bankers who are getting trained the hard way in the early years, who's going to be a senior banker in 10 years and 15 years and 20 years? Okay, so that is and again, this is more a philosophy that I have. Will this change as we go ahead? Maybe it will, but I think partly because as yet I am not ready to leave decision making to AI, and partly because I think we still need to keep uh, training juniors. I think that's pretty much the limit of what we're using AI for at this point.
Uh, that's a great philosophy, Amit. So I like that point. So again, as a continuation to this, since you mentioned about the junior banker, I would like to understand like what's your one piece of advice? You being like already an experienced banker, what is the one piece of advice you have to give to a banker who is just starting his career?
Okay. we never are able to answer in one single bullet point, right? So I'll have bullets and sub bullets here. My broader guidance is figure out if you like this work. Let me add nuance to that. Contrary to what a lot of juniors coming into the industry believe, investment banking is not all glamour. You may, and I'm throwing numbers that I have clearly made up, but 99% of your time will be spent in unglamorous drudgery. Okay. You do it for a year or two, and then you get that 20 seconds where you feel elated with the outcome. What that means is if you don't absolutely love this, it's going to be incredibly difficult to keep up with this. That's number one. Number two, and because you said only one point, this is a sub bullet point. Especially in the context, and we just spoke about how automation and AI is starting to affect the junior end of the banker pool. You have to be enterprising. You have to find ways of making yourself more valuable by maybe adding value to the research, maybe adding value to the putting together a document. You just don't take it as a task. How you do it is very context specific, so you got to figure that out. But you do need to add value to what you're doing to be able to add value to yourself and have longevity in this space. Again, like the challenge with talking about automation is that all predictions start looking weak, where they age really poorly in a matter of months. So I may be completely off base here, but I genuinely do believe that that is something that you need to continue to do that. So love this thing. If you don't love it, do other things. There are lots of very important things to be done out there. And number two, add value to what you're doing. Don't just be a processor.
That's great advice, Amit. So with that, we are coming to the end of this podcast. So Amit, thanks a lot for joining us today. We truly appreciate your time and insights. It was a pleasure having you on the podcast. Thanks a lot.
Thank you, Narayan. The pleasure was all mine. Take care.
Thank you.